Hi traders, welcome back to the channel, the Daily Forex. So in today's video, I'm going to share with you guys how to use the MACD and the RSI to trade boom and crash indices successfully and always have a winning trade all the time. Okay, how to trade boom and crash indices using the MACD and the RSI indicator. So we're going to start this on crash 500 ES market. Okay, we'll go to crash 500 ES market right now. So what we're going to do right here is to put in the MACD and the RSI. So we'll put the RSI on indicator window 1, period 14. You apply to close. The levels are going to be on the level of 90 and level of 10. You put on sell right here for the description, then buy for the description for the levels. The style on 4 pixels color black. Then for the style right here, you put it on 1 pixels color white. Okay, it doesn't mean the colors, but you can use any color of your choice as long as you understand what you are doing on this market. You put on the MACD after the RSI, so it's going to be below of the RSI on the indicator window 1. MACD fast EMA, you set that to 14. Okay, do not use any other figure, only 14, so that you can get a good accuracy. Slow EMA 24, MACD SMA 10. Okay, you want to set these parameters accordingly as you are seeing it right here, so that you'll be able to get a good accuracy when you are trying to analyze the trade. Then you apply to close. For the main color, you put that on black, all right, with the last pixels, which is the last line right here. The signal color red with the last line as well. Then you click on done. All right, now that we have added the RSI and the MACD into the chart right here, now how do we use this MACD and the RSI to trade crash and boom successfully? Now remember that the major indicator we're using here is the MACD. So the RSI basically is to level the trade. That's how I like to call it. You level the trade, okay, so that you'll be able to see when market has gotten to the overbought and the oversold. Okay, you cannot use the MACD alone. You need to use the MACD with the RSI to have a good accuracy. All right, so now that we have added this right here, the MACD basically it tells you when the market gets to the overbought and the oversold using the RSI. At this point right here, if you take a look, if we zoom in a little bit into this market, you can see that when price gets to the level of 90 right here of the RSI, when the MACD gets to the level of 90 of the RSI, it took just after this, you can see when it got to this point right here, the next step was a sell. Okay, the spike came into this market at that point in time. If you take a look at this, another accuracy again at this point right here, it took just 2 candlesticks before the spike came into this market, and even after that another spike came into the market as well. All right, just as you can see at that point in time. And if you take a look at this point right here, at this point there was a spike. You see when it gets to the level of 90, there was a spike. So we can say that when the MACD gets to the level of 90 of the RSI, the market will sell. Okay, the market will sell, although the market might take up to like 3 or 4 candlesticks before the spike, even more than that, before the market would sell, but it will sell. Okay, there's an assurance there that the market will always sell all the time, because we're seeing right here it's happening all the time that the market will always sell. Okay, even though it takes 2 or 3 candlesticks, it will sell. Even if the first sell is little, the next step again, it will still be another sell on the market. Okay, so I want you to notice that, and I want you to also notice another pattern that this MACD always follow all the time. There's a certain patterns that you should also watch out for from this MACD indicator. Now the MACD may not reach the level of 90 before the market will sell. So you should know that whenever you see a certain pattern that this MACD tends to follow, you should know that there's a spike coming in this type of market, so that you'll be able to avoid placing a buy. Okay, so that you'll be able to avoid placing a buy, so that the spike does not catch you. Now how do you know this? We know that this MACD always follow an upward trend, as in just a straight line like this. The MACD just goes upwards, just going upwards, creating an upward trend just like that. and creating a straight line pattern towards the downward trend, just like that, right? But there's a certain, straightening pattern that this MACD tends to follow, and there's a certain level which it drops, just as we can see here. If you zoom in a little bit, you can see that at this point right here, the MACD only created, after this upward trend, one little candle tick. Let's zoom in into the market clearly. After here, this is an upward trend of the MACD going towards straight line, and after here, after this little straight upward trend, the spike came into the market, and we saw that the spike is very long, right? If we zoom out, you can see that, where is the spike? Right, this is it. Right, this is it. You can see when you zoom out. That's why when you are trading, before you place any buy or sell, you want to make sure that you zoom out. You zoom out of the market trend, so that you'll be able to see where the price is. Okay, so that you'll be able to see if there's a high volatility on the market. Now, if we zoom out right here, this is the line. Okay, if we zoom out now, we can see this is the line, right? Take a look. When the market bought up to this point, it sold, right? So there's a higher chance that the space right here is so big for the market to drop. That's why I saw that it dropped up to this point right here. So when you notice a certain pattern like this, when the trend line created very little trend line like this, always have in your mind that there's a higher chance that this market could sell. Okay, does not mean that it's have to, reach the level of 90 before the market would sell. Okay, it does not need to reach this level of 90 before the market would sell. All right, now this little line mainly come on when there's a longer trend line of the downward trends. Okay, when there's a longer trend line of the downward trends, it mainly occur. Now, if you take a look at this right here, there's a very long trend of the MACD towards the downward trend. You can see a very long trend of the MACD towards the downward trend, but towards the upward trend, it's a very little. I hope you understand. The upward trend right now is a very little. From year to year was not much. So the year was very big, but the next step that came in was very little, as you can see. Okay, so these are things you need to watch out for, and there's certain pattern you need to look as well in this type of market. Now, this is it. This is another scenario right here. When this MACD right here got to this point, there was a spike right at this point in time. Now, take a look at this point again. Another spike will come into this market right here. Okay, another spike will come into this market, because look at it now. I zoom out of the market, does not get to the level of 90. Now, if you ask me, how do I know that the spike will come in? If you take a look at this point here, there was a spike, right? But I didn't have to look upwards before I know that there was a spike, that the spike is coming. But you take a look at this point, there was a curve right here. So when you see that here there's a spike, the same pattern that happened here, that's the same structure is creating here. It went upwards and it curve went upwards again. It went upwards, it curved downwards, and it's going upwards again. So the spike came in at this point. The spike came in at this point. Now there's a spike that's going to come in at this point in time. Okay, there's a spike that's going to come in at this point in time, because the MACD has gotten to that level, right? There's a spike that's going to come in during that point. Okay, just as you can see. So when you're trading using this MACD, you need to know the patterns of which the MACD follows, so that you'll be able to see when the market will drop in price movement. Take a look at this point here. But you can see at this point there's a certain pattern it followed. At this point there was a drop in price movement, and whenever you are trading using this MACD indicator, when price has bought, when the market have bought for a certain amount of time, let's say like this, now you can see that this market has bought in for probably over 50 candlesticks, or let's say 40 candlesticks. I know that it's over 40. If you are in this market, you do not want to place a buy. Normally your mind should tell you that this market have already bought for a certain amount of time, so it's not a good choice to place a buy at that moment, because the market can drop in price movement. Okay, it can drop in price movement, even though after it dropped here, This is another thing again. Even if after the market have dropped at this point here, the market will tend to buy a little bit, then it may drop again. Okay, it may drop again. You can see it bought for a little bit, it dropped, it bought for a little bit, then it dropped. All right, as you can see, it dropped. So the reason why this market dropped is because the market D is towards the downward trend. Take a look. And whenever there is a downward trend of the market D, the market tends to sell all the time. All right, this is the first spike before it curved upwards. Look at it. This is the first spike that came in at this point. Then the market did curve, then it went upward a little bit and it dropped. And at this point right here, we already know that the MACD has started creating a downward trend, because after it went upward, it starts shortening, going downwards, shortening. So at this point, you know that the MACD has started creating a downward trend, and there's a higher chance that the spike will come in, just as you saw here. Spikes. Okay, towards the downward trend. A lot of spike, the downtrend of the MACD. There's a lot of spikes. It always happens. It's not that it does not happen. It always happens all the time. The spike came in at this point when we got to a level of 90. You see, after it starts shortening towards the downward trend, another spike. Okay, so when you're trading using this MACD indicator and the RSI, you want to make sure that you know all these things. Okay, you know what you observe, so that you'll be able to see a possible buy and sell entry. All right, now let's go over to the boom market. Usually go over to the boom 500 index market. Now for the boom 500 index market, you know that during the downward trend of the MACD, there's a lot of spike. It depends on the way you set your parameters, because if you use setting the parameters on that MACD, let's say you change the parameters here to another figure, the MACD will not, will not sell when price gets to the level of 90 again. For instance, let's change here. Let's add 314 and we'll click on done. If we go back to the crash 500 index market right now, you can see at this point right here, when the MACD gets to this point, there was no spike. Okay, at this point right here, there was no spike. Okay, you saw there was no spike, so you will not be able to tell when the spike will come in. So that's why you set it, put here to 14, so that you can know when the next price movement will be, right? Then when you set it back to the level of 14, you can see that at this point here, the spike came into this market right now. When it gets to the level of 90, you saw that there was a spike after 2 candlesticks. Right here, there was a spike. Okay, so we'll go back to the boom 500 index market here. The boom 500 index market right here, it just trades like the crash market, the opposite direction. The upward trend of the MACD, the market tends to buy, which is, we call it spikes, right? Market tends to buy in price movement towards the upward trend of the MACD. Towards the downward trend of the MACD, it sells, right? It sells towards the downward trend. Now, how do you know that the spike will come into this market on the downward trend? How do you know that the spike will come in, right? When the MACD gets to the level of 10 on boom, the level of 10 here, you saw there was a spike, right? The downward trend, the MACD gets to the level of 10, the spike, right? The upward trend, there was a lot of spike. Let's see what we can do here. From here now, you saw that there was a spike. Trace it down with me. You can see that at this point right here, the MACD started creating an upward trend, started going upwards, and there was a lot of spike. You can see. So when there's an upward trend of the MACD, you want to avoid placing a sell on the boom. You want to avoid placing a sell whenever there's an upward trend of the MACD, because the market will spike. So what you want to look for is a possible buy entry, not a sell. Okay, we know that we are too in a hurry to place a sell, because we see that the market always sells on boom. We want to follow that trend line just to scalp the market, take some more profit but you need to also watch out for things like this. Okay, you need to watch out for things like this. So I hope after watching this video you understand everything that I've said in this video. All right, so if you found value, do it to like and subscribe to the channel, the Daily Forex, for more some trading tips and strategies. See you guys on the next strategy.